Hi, everyone. Welcome to the 144th episode of the Timing Research Show for July 10th, 2017. My name is David Kosmeter, and I am the creator of Timing Research. Today, we will be talking about the 198th weekly report. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com, and you can download this or any past report there. I have Rob Hanna back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Great to be back. I think this is the first time I've hosted when I've known all of the people on the panel. I think I've been doing it too long now since I seem to know everybody, huh? And we all know each other. So we'll probably get along, but hopefully we'll disagree on some of the points here today. We got a good group. Jim Kenney of OptionProfessor.com, Simon Klein of TradeSmart Forex, and Andrew Keene of AlphaShark are all here. Why don't I go around to start and just let you guys introduce yourselves, since you know more about yourselves than I do. And you can tell us a little bit about your trading experience, how you trade, and the site you're associated with. Jim, since you're at the top of the list on my piece of paper right here, I'll let you go first.
Sure. OptionProfessor.com has DVDs that educate investors on the uses and risks of the option strategies out there, ranging from beginning to intermediate and advanced tactics. And they go from cash flow creating strategies as well as limited risk strategies, two-sided strategies, strangles and straddles and things like that, to give people a working knowledge of how the options work and how they don't work. So they go into these things with a pretty good background on the use and the risk of each tactic. And I provided the content for everything.
All right, great. That's a lot of responsibility for providing all the content. Simon, can you tell us a little about yourself and TradeSmart Forex?
Yeah, hi Rob. Nice to be back here again, and thanks David as well for having me. So I decided a number of years ago that there was to build an educational program to be able to traders from the beginning, from no knowledge, or even to help people who are trading but without having success, to take them through the whole trading life cycle, basically from beginning trader all the way through to professional trader. So I saw that there was many different ways to approach the market. So I wanted to approach the market in a more generic way, as in give a framework in which you can actually read the market in a simple way to basically understand price action and what's happening in the market. And from that, to be able to, for anyone to be able to build a strategy that fits their own personality. So that's kind of stage one of our trading process, so to say, is learning how to read the market, and then from there deriving a trading strategy that fits your personality. And also teaching people the step-by-step process you need to go through in order to run a trading business. So that's what we actually do. So we take people all the way through that process, and then I work with them one-on-one to help develop a trading strategy and a trading plan that fits their personality. That's a whole kind of life cycle. And then we've just launched, which I'm really excited about, we just launched last month our live trading room. And we've been running it with a very small group of people for about 3 months now. And to date, every single trade that we've called in the trading room, that we've actually taken live in the trading room, we haven't had one losing trade yet. So it's a pretty good track record so far in 3 months.
Terrific.
Yeah, so that's what we're about. We're about taking people that are serious about trading and helping them through their journey, the ups and downs, and helping them to become successful traders.
Okay, great. Thanks, Simon. I look forward to talking to you some more. Andrew, you want to give us just a brief background on yourself and AlphaShark?
Yeah, Andrew Keene, trader at the Chicago Board Options Exchange for over a decade. I've been doing CNBC, Bloomberg, Fox Business for about 12 years now. We run our company into subscriptions and products. The biggest one is we run one of the largest trading rooms in the world for active traders. And we have 9 other subscriptions on that side. And on the product side, we do a lot of proprietary-based indicators on Thinkorswim, TradeStation, and Ninja. And we also we have 14 educational courses on trading. We've sold over 10,000 courses in the last 5 years and teaching people how to trade.
It's a lot of courses.
Yeah, people like me, I guess.
Can't imagine that.
Me either. I don't know why either.
I'm kidding. All right, that's great, Andrew. Thank you. For those that don't know me, I'm Rob Hanna. I've been around on the web for a while. I started trading full time in 2001, and then I started writing for Trading Markets a few years later. I wrote for Trading Markets from like 2003 till 2007. In 2008, I started a site called Quantifiable Edges. I still run Quantifiable Edges. In 2012, I started a site called Overnight Edges, which looks at trading between the New York Stock Exchange market close and the next day's open. And then Overnight Edges merged with another site called Master the Gap and became InvestiQuant. So now that's part of InvestiQuant, and I work with InvestiQuant with their Overnight Edges area as well as the swing trading there. So swing trading is what was where most of my trading is, and that's kind of the time frame we're going to be talking about right now. So why don't I go in reverse order? And what I want to do is just kind of let's get out there. Who's bullish? Who's bearish from Monday's open to Friday's close before we give any reasons for it, and then I'll come back and we can all give reasons and what we're seeing that makes us bullish or bearish. But I'll go first here. I will let you guys know that I am bullish over the next 5 days. I expect to see a rise between today's open and Friday's close. So Andrew, where are you?
I am bullish as well, and it's kind of tweaked because we're talking about today's open as opposed to where it is right now, because we've rallied since the open. So I'm bullish. We continue to be in a bull market. We saw retail getting hit. We have a lot of bank earnings later this week, which should move the market. I personally always trade better in a bear market, so I always want it to be a bear market. But the fact is, every time the market sells off, we get bought. So I would say about 58% chance we go higher from the open today.
Andrew, you just gave away your whole answer. All right, that's okay. So I'm bullish. Andrew's bullish. Simon, where are you at?
I'm also bullish this time.
Uh-oh. Jim?
Well, I tell you what, I think right now would be something to look into a strangle situation, because like Andrew was saying, you got a lot of stuff coming up Friday bank-wise. The market filled a gap today at 24.35 or 24.30. I was getting into the gap around 24.35, which is also around last week's high. So if we do blow through that, obviously we could get some good volatility on the upside. And if for whatever reason we were failing from here, we could see another selling thing. So I would say that strangle opportunities, investigating those, what they cost, what they need to see volatility-wise to be any good. This might really be a week to look at something like that, because right now, again, we're getting into that gap 24.35, and if we get through it, obviously we could get a pretty good acceleration on the upside. However, if like we saw in the last couple of weeks, if we fail from this area and something comes out that's not very positive, you could see a sell-off as well. So that's my non-view, I guess, huh?
Okay, so you're coming in neutral for us.
Well, I wouldn't say neutral. I'd say it's going to go sharply higher, sharply lower, and it's going to be feeding on the stuff that happens on Friday, and maybe how Yellen's talk in front of Congress goes. How much the punch bowl is going to be taken away vibe comes out of her Wednesday and Thursday talk.
Okay, so you're not necessarily strong directional bias, but you're looking for an increase in volatility here.
Definitely.
Okay. All right. So you're not going to be looking at shorting VIX hard this week.
Well, the VIX is telling us that you guys are right, and that it's going to take off through the resistance, and the news on Friday is going to be showing the banks making a lot of money, and then there'll be a buying run, wiping out all these Johnny-come-lately shorts. That's what the VIX is kind of saying.
Right.
What I'm saying is, if it doesn't play out exactly like we're saying, it could go the other way, and you might want to have two sides going.
Right. Okay. Let me come back through. if you have, well, is there anything more you want to add to it? You mentioned Friday's numbers and the banks. Is there anything else you want to that you're looking at for this week as far as technical levels? You mentioned Yellen's speech. Anything else that could change your mind on this that you think we're going to be more inclined to definitely be headed in one direction?
If we start taking out 24.36, last week's high, and of course, if you take out 24.53, which is the high of the entire move, then standing in front of a freight train is probably very ill-advised.
Okay.
There is a lot. Listen, the reason this thing is having a hard time going down is, you've got a lot of things that people are concerned about not being involved in, and leverage lending, is probably going to really see a big jump, and repat money and tax cuts and tax reform and corporate earnings. I mean, standing in front of all that, that's what people don't want to do. So that's why, and of course, the passive investing number has gone through the roof. So these people are asleep at the wheel, and maybe the Alfred E. Neumann "What Me Worry" is really the way to go.
Yeah. Interestingly, we're already getting up there. I mean, we're at 24.28 right now, I'm looking at. So we're only, like 8 points away from that 36 level. So we could see a decision coming the next, if not this afternoon, tomorrow, or tomorrow perhaps.
Yeah, I mean, sometimes turnaround Tuesday can occur. Sometimes turnaround Thursday can occur. So I would imagine Tuesday or Thursday, you'll probably see what cards are going to be dealt. Yeah.
Okay. Simon, you want to expand on your bullish answer there, and let us know some of the things you're looking at and why you might. Oh wait, Jim. Oh, never mind, Jim. I was going to ask you your confidence level on higher or lower, but you went with both higher and lower, so I can't really give you. I can't hold you to a confidence level there, I guess, right?
Okay.
Well, I'm pretty confident that volatility will occur, so I go with 60% on my volatility view.
Okay. All right. Simon, you want to share more details on your opinion with us?
Yeah, sure, Rob. Again, it's all from the charts. All the decisions I make are based on the charts. The charts show you the footprints of money if you know how to read them. So again, if we look on I'm going to go take you down from the monthly chart down to the daily chart. So the daily chart went an uptrend. And again, the trend is your friend until the bend in the end. It's still uptrending, okay? So the odds on the monthly time frame are higher, okay? If we go down to a weekly chart here, we just put in a higher low over here. So we've got a higher high, higher low, expecting a continuation of the move to the upside until proven otherwise. Again, you can only go with what the market's showing you at this moment in time. If something changes, then we change. We're very nimble when we trade. If the market's saying higher, we go higher until it tells you otherwise. Now, let's have a look on the daily chart, which is where it gets interesting. Daily chart, we're going pretty much sideways. I'm going to say why did I make that decision right now? Now, this move down made a slightly, this move down went slightly lower than this pivot over here. So I was expecting this move up to come down below this. As it didn't, and we put in a higher pivot low, the next move I'm expecting is a higher pivot high. So I'm expecting it to continue moving higher. Now, if that fails to happen, it means something else is likely to happen. So we're actually set up at this moment for sideways action. But the last thing that happened was a higher low, so I expect it to continue moving higher above here. If it doesn't, we're going to go sideways. We're going to go back down again. So this is what I'm looking at the moment. We've got a lot of sideways action over here. We had a failure to follow through to the downside here, which is showing that the current bias in the market is still slightly to the upside. Put that together with the bigger time frames of the monthly and the weekly chart, then it's pointing more in that direction for the time being. Basing in a bullish market generally breaks to the upside unless we're at a supply level, which we're not. We're at all-time highs here. So I would expect it to continue going up until, of course, it doesn't. And you'll know that because the charts will tell you that. So that's what my decision's based on.
Okay. All right. And is there any, do you look beyond technicals, or is there any reports coming out this week that you're worried about, or fundamentals, or?
Purely technicals. I used to spend, when I first started trading, this was about 12 years ago, we used to come into the office before the New York Open, like about 3 hours earlier. And we used to go through all the earnings reports and whatever was going on in the stocks. We actually used to look at balance sheets and all these sorts of things to try and, give us an edge in what was likely to happen based on the news, upgrades, downgrades, earnings, everything like that. And I found at the end of all that it didn't really give me an edge over anything. The markets sometimes on good news would go down and sometimes on good news would go up, what you would consider good news. So I thought, I'm trying to decipher what it means and how the market is going to play out based on my understanding of the news or economics or what's going on in the world. And then what actually happened in the market sometimes didn't match up. So I thought, okay, so the best thing to do is to focus on what's actually happening right now in the markets, because that tells you what's happening and that doesn't lie. Understanding the reasoning behind that is not so important. You have to understand what's happening more so than why when you're a technical trader. Sometimes why is a dangerous question to ask yourself. There's good news. Why is it going down? I'm buying and I buy more and it keeps going down. Oh dear. There's a point where you have to cut that trade. It's just not working. What's happening in the market is not reflecting your belief about how the market should play out based on fundamentals, so to say. So the technicals will tell you exactly what's happening if you know how to read them.
Yeah, a lot of times news we get is incomplete information.
Correct.
So we may read it as good news or bad news when it's not necessarily.
Correct. We're not privy to all the information out there, so.
Right. Okay, Andrew. I wrote down that you were bullish, but I didn't. But I'd encourage you to expand upon it a little bit. I know you did mention a little beyond just saying bullish, but go ahead. Let me. Once again, I forgot. Simon, what's your in the bullish take for this week?
I'll say again. Sorry.
We're supposed to assign a confidence number here.
Oh, confidence. I would say at the
60%, 70%.
I would say probably a higher, probably 55%. Based on the fact that we're still on the daily chart kind of sideways.
Okay. All right. Now let me jump to you, Andrew. If you want to talk a little further about why you're bullish this week and what things you're seeing that lead you to that conclusion, that'd be great.
Yeah, one big factor I always look at is the CBOE's volatility index, known as the VIX. And every time we see the VIX spike even 15%, which is spiked one day last week, and then it basically rolls over. And the VIX being 11 is just remarkable. I never thought I'd see a time period where the VIX would sit at the 10 handle and getting actually under 10 on the spot for a very long time. Obviously, there's no conviction or there's no uncertainty to the downside. I think the fear is going to the upside and taking out the highs. I use Ichimoku, Kink, and Hoi for my technical analysis. And the Ichimoku Cloud, it is above the daily chart, above the 2-day, above the 3-day, and above the weekly. You combining that with bank earnings, which should be strong, and JP Morgan close to 52-week highs. As interest rates go higher, the banks always make more money, so those should be good. We do have Yellen speaking on Wednesday, which could move the market for economic data. Also, we have oil number every single Wednesday as well. I'm long some oil names, so that can move the market. Oil's been weak for the last couple of days, but I think you can get back above 47. So for all those reasons, I'm bullish. My certainty, like I said, is probably about 58%. I'm not overly bullish. I think it's stock specific. I'm long oil names. I was long steel names for a couple of weeks. That worked out well. Abercrombie came out with some news that they were going to sell their company. So all the retailers got hit harder today. I wouldn't be in those specific names, but I will be getting long the bank names in earnings.
Okay, great. Both you and Andrew, both you and Jim mentioned Yellen on Wednesday being a key factor or potentially market mover. Let me ask you, and then I'll ask Jim the same question. Would you anticipate that we will see the market become more quiet between now and her talk with news pending?
Yeah, I mean, as a generalization, anytime before news like a Fed meeting, we are usually quiet. I mean, today we've been in about a 6-point range for the S&P, and average range is about 10 to 12 points. I look at, at the money straddles in the option market, and the SPY, the at the money straddle, is about $1.60 between now and the end of the week. So they're implying a 16-point move either up or down between now and the end of the week. And that is very, very small. So I don't think anything major fireworks are going to go up in either direction. But, I think that, once again, I said the market's going to go higher. But, volatility has been weak. It's been slow for a trader. Day trading stock is one of the hardest things to do. Trading has been a little bit more challenging from my point of view, just because we don't see much volatility and movement.
Yeah, 16 points is that's a pretty quiet anticipated week, right? You're only changing that much.
Yeah, agreed.
Jim, any comment on?
I do think it looks like things are getting a little bit quiet. The 10-year note went up to that 2.4 area, and it's kind of fading off of that a little bit. And so, we got the Bund sell-off in bonds last week. I think things could be a little bit quiet unless something starts coming out of the woodwork a little bit. That oil situation, on the XLE, did go down and had a little bit of a turn up here in the last little bit of time. And the XLF does seem like it's trying to get above 25. So if these earnings do come in and blow them out of the water. But Friday's got a lot of stuff going on. You got CPI, retail sales, industrial production, business inventories, consumer sentiment. You've got Baker Hughes rig count. So then you got the bank earnings, and Thursday you got Delta. So get your sleep here today. Get your sleep here today, because between yelling and all that stuff I just mentioned, you better get the coffee going later in the week.
Yep. Okay, so kind of a calm before the storm thing for you here.
I think so.
All right, maybe so people will have a little bit of time, meaning today or tomorrow, perhaps, to get in some of those volatility type positions that you're looking at there. The stress triangles, sorry.
And then, of course, we'll go down the water, and that'll be that, right?
All right, I'm bullish also. I've got a little bit different reasons. One study I did last week looked at what happens when we close down during an uptrend. So I was looking at anytime the S&P is above its 200-day moving average, when it closes at a 20-day low, and that down day is the biggest down day in the last couple of weeks. And that happened on Thursday, right? So we had the big move down on Thursday. That suggested a reversion, and that we'd probably get a bounce out of that. Now that bounce has pretty much happened already. It can certainly go further, and there's nothing suggesting it wouldn't. But if we close where we are today, then we'd have 2 days of a decent bounce, and we've kind of reverted to the mean here. I guess if you're looking at like the 10-day moving average is a mean. S&P went through it, the Nasdaq went through it today. So we're back in a little bit more neutral territory. But overall, the studies I was looking at, I wasn't seeing anything bearish towards the end of last week or over the weekend. Everything I was looking at was either neutral or bullish. I also look at the InvestQuant swing odds. And interestingly, coming into today, the 5-day odds looked very strong. And for SPY. They were coming in at about 62% probability and what we call profit factor of 1.5. That basically means that if you were to go long and hold for the 5-day period, you could expect to be right about 62% of the time, and your winners would be larger than your losers. So overall, you would probably make, or you would have historically made, 50% more than you would have on the winners than you would have lost on the losers on a net basis. The 1 and the 1 day look pretty good. Those two. The 3-day is a bit more dicey, interestingly. So we could see some volatility during the week, that suggests to me, but we're most likely to finish the week higher. Of course, negative reaction to bad numbers is not baked into these numbers, so things can certainly change along the way, and that's why I reevaluate every night. And so there are some hiccups potentially in the road, as all these other guys mentioned, with oil, with bank earnings, with anything Yellen might say, and so forth. But right now, it appears the market is set to continue higher. All right, let's move on. We got a bit of an interesting question today, and it's outside of the realm of what we normally talk about in here, I think, and that is it talks about universal basic income, and is actually two parts. So I guess we'll divide it into two parts. Although the second part is any additional thoughts you'd like to share. So maybe we can just get it all out in one. But the concept of universal basic income, I'll read the question here, and we can go through perhaps in the same order we just did, starting with Jim. Universal basic income has been around for a long time, but it's gained more traction in recent years as it has become clear that automation will do away with many jobs over the next few decades. The question is, how do you feel about universal basic income as a whole? Jim, do you have an opinion on it?
Well, I just maybe I should go last, so then I can glean what exactly universal basic income is off the rest of it, off the rest of you, and then I could follow in, because I'm a little hazy on that subject. So maybe I should go last and get a better idea of what exactly that means.
Okay. Anyone want to jump in to start? Andrew or Simon?
Can you repeat the question? I'm a little perplexed as well.
It's talking about the concept of universal basic income, which.
Can you get a basic definition of that, Rob?
Yeah. Well, to my understanding, it is
yeah.
almost like.
Since I'm putting you all on the spot with this question, I could go ahead and just define it if you want.
Sure, that'd be great.
Yeah.
I should have included more of a definition in the question, and because there's a lot of different types of UBI and a lot of different proposals and that sort of thing. So the version that I was thinking of when I wrote the question was generally basically the most popular idea, as far as I understand it, is that the government would basically stop all forms of distribution of social welfare of any kind, and replace that with one flat payment to all citizens every month or every week, or whatever the period that they come up with. So, for example, it could be like $1,000 a month to all citizens for their entire life, instead of having all these different programs. Some of them run by the federal government, some by states, some by local, and of course Social Security and all the different types of government distribution of any sort of benefits. So it would replace all that with one flat check to all citizens for their whole life, starting at age 21 or 18, something like that. So that's the concept.
And who will be the president, Joseph Stalin, or? I mean, obviously, it's some type of socialism potentially going on out there, and like I say, as we found for the last 8 or 9 years, anything can occur under certain circumstances. I mean, nobody thought you could go to the bank and tell them you're not going to pay on your house, and you're going to get a lower loan, and you're going to ask them to forgive your loan. So, I mean, once things like that start going on, obviously, school's out as far as conventional thinking.
Well, it would be the idea for it is to be just cash deposited into a bank account. So then the person can use the cash. People will spend the cash as people spend, any other type of earned cash, which is, spend it at local businesses or, that sort of thing. But the idea is to give people a cushion they can rely on when automation starts doing away with more jobs. So Mark Zuckerberg has been talking about it a lot recently, prominently, and a lot
of maybe he could fund it. He's got quite a bit of capital up there.
Yeah.
Yeah, it seems like I've seen some stats on it. The concern is that, like you talk about here in the question, that automation is going to be doing away with a lot of things. So, for instance, even basic jobs like truck drivers, once we have self-driving cars and fast food cooks and I'm looking at a list here I just pulled up: farm labor, insurance underwriters, mail carriers, all kinds of things could be automated with, robots of the future once we're in the Jetsons type stuff, and then there will be less of these kinds of jobs to go around. So do we need this kind of universal basic income to help people out is the question, I guess. I'll be happy to give my opinion on it, and then you guys can. I mean, I haven't studied it a whole lot, but seems to me that when technology kind of wipes away one job, we tend to get more different kinds of jobs that arise, and I think if we're losing jobs in one area, then we could certainly be creating jobs in another area. And if we were to take these kinds of funds and put them into re-education to help people adapt to the changing job market, that might be a bit better than sending a basic check each month.
Kind of invest in the people kind of thing.
Yeah. Anybody else want to jump in here?
Well, I think it might be helpful to consumer spending, because if the people have money, obviously they can go out there and keep the 2/3 of the economy going.
That's true. Yep. Andrew, any thoughts on your end? Have you looked at this at all? Have you heard about it?
My mother always taught me never talk about politics and religion. So
yeah,
if we wanted to ask my opinion about Trump, I'd probably be here for an hour, and I think some of my subscribers might be a little upset with me. So my feelings or beliefs are that I don't think that people should get X amount in cash. In like Chicago, you have link cards where at least they have like a card where they have to put it towards food. I think getting money is kind of ridiculous, but if they put money towards groceries, that's a little bit more, I guess, safer. So that's probably my take on it. I haven't studied the subject as much as I probably should. I was Googling it while you guys were talking about it, and talked about Zuckerberg doing it as well. But it does seem a little communist as well. So I agreed with whoever said the Stalin comment.
Yeah. I wonder how safe it would be also.
Yeah.
There would certainly be a system, I would think.
Here in Nevada, it might be a boon to the casinos, that's for sure.
Well, that's true.
Yeah. Get the check and get to the sports book all in one afternoon. Yeah.
And the sports book normally wins. Simon, any thoughts from you on the subject?
Well, I haven't really thought about it to give it, I guess, deep enough thought about it to think about all the ramifications. I'm sure there are a lot of ramifications of doing that. Maybe there will still be people that if you kind of give an equal amount of money to everyone, there'll still be people that are lacking. Maybe they need more for their medical care and that sort of thing. So that might not solve the problem to take away, social benefits or whatever, that, medical benefits that they may have got before them, and then replace it. Everyone across the board gets the same amount of money, then that may cause an issue that there still be, as I said before, there might still be people lacking. But it's an interesting concept, and I think what you said was has a lot of truth to it, that society's changing all the time. You know, technology is advancing, and it is producing lots more different types of opportunities. So we all have to kind of move with the technology and adjust. And the life today is not like what it was 20 years ago.
Yeah, no, I mean, there's I don't know a whole lot of video store owners that are still in business here, but they all seem to have moved on, right?
Yeah, I mean, there's incredible opportunities that you know, that were
Yeah.
the internet and everything, and the connectivity that we have to work as almost a whole world together, as opposed to just, you know, because like what we're doing now with this webinar, we're all over the world. We've got people watching from all over the world, and we're all connected, and it's incredible to share ideas and to grow and to give to society and to help people.
Yeah, where are you guys? Simon, where are you talking from?
I'm originally from England, but on my journey, I lived in, I guess I lived and worked in New York for a while. I'm from Manchester, and I moved to London, New York, and I'm currently now in Israel.
In Israel, okay.
In Jerusalem.
Wow. All right.
Yeah.
I'm in Massachusetts. Andrew, where are you?
I'm in San Diego.
Okay.
Sorry.
And Jim, you're in Las Vegas?
Yep. But I went to Boston College. How far are you? North Shore or South Shore?
I'm a little bit west. I'm in Medfield. I went to Boston College also.
Oh, did you?
Yeah.
You know the secret handshake or not? Yeah. Or have you forgotten? Yeah.
I've certainly forgotten. And David, I think, is down south in Louisiana, Alabama. No.
Louisville, Kentucky.
Kentucky. Okay. All right. So yeah, we're all over the place, boys. So that's pretty interesting. You're right. That you know, technology has brought us together from I mean, seriously, San Diego to Israel. We are certainly all around the world right here.
You know, at the end of the day, it's probably a very innovative way of redistributing wealth and to keep the consumer spending going. And so from those two aspects, there could be an appetite for it down the road at some point.
The argument for why it needs to be cash typically instead of you know, just for food or just for, you know, certain things is that basically each person knows what they need to put the money toward for themselves. Some people put it toward education, some people put it toward food, some people will put it toward, you know, childcare, or some people will, you know, like in some of the tests they've done, there've been a bunch of small scale tests around the world, and in some of them, you know, like a married couple that had kids, one of the partners would work a little less and spend more time taking care of the kids, you know, that sort of thing. So each recipient would know what best to do with the money for themselves, and it would be you know, a way for people to not be as reliant on a job, so that they could you know, start their own business and you know, spend more time on training for new jobs, that sort of thing. So.
Well, it's an interesting concept, kind of redone perhaps redone from past concepts, but I don't think it'll affect this week's trading. So we don't, maybe we don't have to worry about it too much, and we can educate ourselves further if it looks like it's something that's actually going to
I like
happen.
to put in more longer-term economic questions every once in a while.
Yeah.
See what people have to say. So, for you guys and for everyone watching too, if you have any you know, ideas for future questions that you'd like me to ask in the weekly surveys, feel free to email me anytime on those ideas.
Thanks, David. I think you did a good job of keeping it interesting. Certainly different than what we're normally talking about in here, as far as you know, just all technical stuff. So that's great. Let's if anybody has anything more to add, I don't want to step on anyone's toes. Otherwise, we can move on and talk about any trade ideas you might have for this upcoming week. All right, let's move on then. Jim, I'll start with you, if that's all right. I'm guessing you're going to have a volatility play.
Well, as I said earlier, from the VIX being where it is and the market going up and trying to fill this gap from last week, and with all the news coming out mid to late week, I just anticipate that this volatility could pick up quite a bit. But the one thing on a little bit of a longer term basis that I'm kind of keeping an eye on, and again, this is strictly my opinion, is that we hit the 2453 mark on the S&P, and we're going to see how this month of July plays out. We may make a new high, we may not. We'll probably know pretty soon. If we don't make a new high, then I would think that it's possible that in the months of August, September, the market may get disappointed in waiting for things that are not occurring. And the only concern I have, because we all know there's powerful bullish forces going on in this market. To deny that, you'd have to be a crazy person. So what is the one concern over another that I would have? That's my long-term moving averages on the monthly chart coming in about 2,200, and us being at 200, 250 points above that. Obviously, that's not been problematic since the beginning of the year, but it could be as we get into late summer and Labor Day time, if we are seeing a lot of gridlock and a lot of the things that we hope are going to happen don't happen. So technically, I would look at this month of July and see if we make a new high. If we do, then I'd look at the month of August and see if it makes a new high. And if it doesn't, the first month that we see a lower monthly high than the previous month, I would start investigating strategies such as collars and married puts to try to bracket or protect the equity that you've built up. Because I think that if this market were ever to get disappointed with the extreme lean to the long side, I think, and the 2,200 area on the monthly long-term moving averages, there's a little too much real estate for me between the current price and that average for me to think that at some point that could not be problematic. But you don't step in front of freight trains, so having a little bit of technical evidence that the market has failed to make new highs is probably the way to go as far as, trying to see if there could be a turn late, in August, September, October, something like that. So although that's not a weekly deal, that's my opinion that I think might have some merit, and only time will tell if it has any merit.
Yeah, the taller they are, the harder they fall, right?
Yeah.
So, yeah, being that far from the 200, you can, you are in danger of a reversion at any time. And the interesting thing is we've been above the 200 for quite a while now. And the dips below it have been very brief. 2016, early on, we had a dip below, right? And 2015, that kind of August China scare, and other than that, we've been above it for the last few years. Really haven't seen any kind of strong move down since 2011, right? On a sustained basis. So it will be interesting to see if we get down to the 200, and if we get below it, what that'll mean. Very few people are used to trading in a downtrend anymore, and very few people are used to seeing their account balances go down. And so we could see the next bear could be a frightening one. I believe. Another thing that worries me a little bit about it is when you look at it from a futures trader standpoint, in the last bear market, in the last couple of bear markets, they finished both down around 700, right? So for the S&P, and at that point, the margin on futures was the same. It's $50 a point, right? So now we've gone up fourfold since then, or 3.5-fold, and you're still looking at $50 a point. So a lot of people that trade futures don't recognize just how much leverage they are now using. They're using 300% more leverage on every trade than they were years ago. And that's a lot of leverage to be out there, and that can create some big moves once they get going, I think. So that's something that I've kind of got in the back of my head as far as one thing to that could be a catalyst for accelerating any kind of move. But now I'm getting off track. Sorry. Thank you, Jim. Anything you want to tell us about? Or I'll come back to you. Simon, any trade ideas for you for this week?
Yeah. So let me share the screen. You can see this?
Yep.
Okay. Trade idea on the Australian dollar. Again, it's a kind of long-term idea. It's actually set up on the monthly chart. I'm looking for this to break above this area and move all the way up. There's potential move here of from around where it is now, around 76 up to like maybe 95, close to 2,000, 1,900 potential pip move. Again, I'm not sure it's going to do that, but that's what the potential of this trade is, can move all the way up to this level. There's an entry potentially happening on the, if we look at the weekly chart here, we go down, we can see we're moving up here and we're pulling back to demand, to support, yeah? And if we look on the daily chart, we actually put in a potentially 2, we're still making higher pivot lows here. So we have potential maybe to take the trade at the end of the day. If you want to take on a daily chart, this will set up today as the close, and to put your stop maybe behind here and see how far it goes. Now, again, it's just an idea. I've been watching this one for a long time, waiting for it to set up. I might have mentioned it on previous shows as well. And the potential reward to risk is great on this one. Again, it's more of a long-term trade. You can actually day trade it, and you could swing trade it as well, and take the swings. There was an entry intraday down here just now, and it's already moving to the upside. So that's the idea. So I'll share it with you. We'll see how it plays out.
Great. Good luck with that one.
Okay.
And anyone that takes it as well, hopefully it works out for you.
Yeah, take it at your own risk.
That's right. Every trade. I mean,
that's what we say in our trading room. You trade at your own risk.
Well, yeah. I mean, people got to take ownership of their trades, or it's
Sure.
they're never. It's never going to work as a trader.
That's a very important point there, and that's one of the for beginning traders or for traders that are struggling. The first thing you have to do to be able to succeed is to take responsibility for your trading results. It's not anyone else's fault if you're not succeeding. It's your own. And once you take the ownership of your, of where you are with your trading, then you can make changes. If you're always blaming it on someone or something external to yourself, then you'll never work on yourself to be able to get to where you need to be, because it's always someone else's issue external to you. And you'll constantly go round and round in circles and not get where you need to get to until you actually realize the problem's you. And you need to change. That's it. Okay.
Yep, I agree with that. Andrew, you got any trading ideas for this week that you might want to share with us?
Yeah. So the way that I trade is a little bit different and unique. I watch institutional order flow in the option market. So there's around 8,700 publicly traded companies, and there's about 4,199 with options in those companies. So I watch for the biggest and best traders putting on positions throughout the course of the day in the option market. And we all know the option market is, stock on steroids, where it can magnify your returns very easily. So the one we saw today, we saw institutional order flow of the option market in POT, potash. Trader came in and bought about 5,000 of the August 17 calls. And those I flagged for about 55 cents. Those have gone up to 85 cents. So on an ROI basis, they're up about 60% just today. The stock was trading around $16.95 at the time. So those are interesting. So I'll be looking to get long potash on any pullback. That one has already moved. One that hasn't moved is I'm long some DVN, Devon, AUG 33 calls. You can get in those for about 45 cents. And I've been trading these in and out, adding to the position. And when I do trade, I like to trade stocks that have a big standard deviation move, that move a lot during the day, and oil stocks are very volatile and do move a lot. So potash is one, maybe it moved too fast already. Those are up 60%. But the DVN AUG 33s, I'm still in those, and I like those.
Okay. All right. Thank you. The one trade that that I was going to share here is Southern Companies, symbol SO. It's done pretty much nothing but go down since the middle of June, and I've got some indicators and systems suggesting it's primed for a bounce. So I've already taken a little bit of it, and I would add to that position today if it closed lower. It's up right now, but not by a whole heck of a lot. So I'm looking for a bounce in the ugly-looking chart of Southern Companies right now. That's SO. All right, I think we're just about
Rob,
there.
Rob, I just had a quick question. Do you think if this 10-year note rolls over from the 240 area, that might be helpful to SO?
Potentially. I'm looking at it more as a short-term trade, so I'm not all that worried about that. But
because sometimes the utilities do better if the rates are easing off a little bit.
Yeah.
Not always.
Yeah.
Not always.
But yeah, that's a good point that you bring up there. But yeah, with utilities are a lot of times a big dividend play as well. So I don't often short-term trade them, but I do on occasion, and that's what I'm looking to get in and out of over the next few days here. As I mentioned, I was looking for a bounce in SPY based on some research on Friday, and we saw some good numbers come out in for the InvestQuant swing edges data, but that's already mellowed with the bounce on Friday, so I wouldn't be looking to get into that right here. But if that pulls back again, I certainly may. If we go down and take another leg down, I might look for the next bounce up. All right, let me just go around the horn one last time. You guys can let me know anything that you got going on at your sites, if there's any special offers you got happening, or if there's anything else that we should know that I neglected to ask. Andrew, why don't I start with you? I'll go from the bottom up this time.
Yeah, so we have a special going on. We actually have we run an open house the first week of the new quarter. And last week, since it was 4th of July, we didn't run last week, so we're running it this week. So you can sign up for our trading room for $79 for the first month, and it renews at $99. The link is alphashark.com/open house. You get 7.5 hours of audio and visual from 8 a.m. to 3 p.m. So that would not be 7. That'd be 7 hours of audio and visual with a community of almost 300 people plus 5 moderators running the room on their own individual trading accounts. I take the opening bell for the first hour and a half of the day, plus all of my personal trades sent via text and email. And you can get in there for less than a cup of coffee. So daily. So it's alphashark.com/open house.
All right, great. Thank you. Feel free to, I think you can post that link into the group chat as well if you want.
All
right. Simon, anything you want to tell us about something, stuff going on at Trade Smart Forex right now?
Yeah, we actually, as I said earlier, we launched our live trading room. So it's actually live now. You can go to my website and you can click over here and it'll take you to the page and you can start a trial. It's a 2-week trial, and then you can decide which type of program you want to go, either on a monthly basis or if you want to do it 6 monthly basis or a yearly basis. And you can come and join the room. We're trading live. There's a couple of other people that I trained many years ago that are in the room, all professional traders. And it's an educational room. We explain every single trade that we're doing and why we're doing it. So it's not just blindly following. You'll learn by being in the room how we actually take our trades and manage our risk, and how we manage ourselves from a psychological side, when trades maybe move against us, or how do we deal with that? And you'll learn how a professional trader trades, how we find trades on a daily basis, and how we manage our risk and manage ourselves. So again, this is a room. Anyone's welcome to join. Come for a two-week trial. Just to be completely upfront, the trials are not free. I don't believe in that. I want people that are committed. So if you're committed, come for a 2-week trial period. It costs a very small amount of money, but again, it's a commitment. I've noticed with my experience in life that if you pay for something, you're more committed, even if it's a small amount. So I want serious people in there that are there to learn. And we have a wonderful community that we're starting to grow. And so feel free to join. You can go to, I think David's going to post it in the link below the YouTube video, but this is a link if anyone wants it. You can go to the website, click over here, and we look forward to welcoming you. Thank you.
All right, great. Thanks, Simon. Jim, any last anything going on Option Professor we should know about?
Basically, we always invite people to go to the website, optionprofessor.com, and check out the 7 DVDs. Lots to learn, a lot of moving parts and options. So the more you know about the different strategies, uses, and risks, the better off we believe that you are. And again, we don't make trade recommendations or anything like that, but we do try to make sure you understand all the different types of tactics. And then, of course, how you apply the tactics is up to you. But of course, we believe knowing the ins and outs of the tactics and the trading of the options is very important. So that's what we bring to the table for people to try to make them more aware of what's out there.
All right, awesome. Thanks, Jim. And it can't be all bad because he's a BC guy. So
that's right.
All right. And for me, if you want to learn more about InvestQuant, and I do a newsletter there, a nightly letter called The Navigator, and we recently started offering free trials of that. So you can just go to the link I posted in here, InvestQuant.com /swing trading trial, and sign up. It's a free trial. You'll see how well the Navigator has done over its lifespan. You can also check out quantifiableedges.com. I'd welcome you to go there and check out quantifiable edges and learn all you can about quantitative trading. That's it for me, David. Thanks again for having me host with this with a great group once again.
All right.
And I look forward to coming back next month.
Yeah. That'll be August 7th that you'll be back. So.
Okay.
And that'll be with Andrew again too, actually. So just a reminder for everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us next week. That'll be July 17th. Kurt Capra, Anka Metcalf, and Simon Klein will be back. And I want to thank all my guests again for this week. Simon Klein of TradeSmartForex.com, Jim Kenney of OptionProfessor.com, Andrew Keene of AlphaShark.com, and Rob Hanna of InvestQuant.com. So, thanks, guys.
Thanks, everybody.